So today we are starting a new course, and in this course we will learn how to do bookkeeping in accounting. So it is very important and fundamental part of accounting. So it is very important for us to understand bookkeeping. Very first, we need to understand what is accounting, because bookkeeping is a part of accounting, and accounting is a very broad term. So in accounting is a process of identifying, classifying, summarizing, and interpreting the financial transactions of the business. So in accounting, very first we identify the items, like what are the assets, liabilities, expenses, and capital in the business. Then we classify them, means we write them separately. Then we summarize, like write the totals of the accounts, and then we interpret those financial transactions in the business. So interpreting includes making financial statements like income statement and balance sheet, but it is not part of your course. We will learn only bookkeeping. Okay, so we will keep it very simple so that you can understand. So bookkeeping is a process of recording all financial transactions of your business into individual organized accounts. Bookkeeping is a process of recording financial transactions. Which financial transactions? Like whatever thing is coming in the business and going out from the business, and you are paying for it, means it contains a monetary value. So we need to record that transaction in the business. This is called bookkeeping. But bookkeeping contains some rules. So after learning those rules, you can do easily. Understanding debit and credit. In accounting business, transactions are recorded through debit record and credit record. So when you will be learning bookkeeping, you will see like every time you are using this term debit and credit, and it is very important. Means whenever a transaction occurs in the business, so there will be two effects of each transaction. One will be debited and the other will be credited. This is called dual impact. This is called dual impact. Remember, dual impact. So let's learn what are the five head of accounts, which are very important for us to understand the bookkeeping. So if we have a good command over these five head of accounts, so we can do bookkeeping and we can learn accounting very easily. So remember ulcer. To remember these five head of accounts, remember this term ulcer, ALCER. So A stands for assets, L stands for liability, C stands for capital, E stands for expense, and R stands for revenue or income. So it may be easy for you to remember from ulcer: assets, liability, capital, expense, revenue, and income. But the thing which is very important for you, like in the last slide, I told you about debit and credit. So you need to remember one thing here. Like, for example, when we talk about assets, so whenever any asset is coming in the business, we will record a debit entry. And whenever any expense occurs in the business, we will record a debit entry. Means, for example, we are buying a car for the business, a vehicle for the business. So so our assets are increasing. So whenever asset increase, we record a debit entry. Okay, we record a debit entry. And for any expense, for example, salary expense, wages expense, utility expense. So any kind of this expense will increase your debit side. So increase in expense will also increase the debit side. Okay. One more thing. So now we have learned that whenever asset and expense increase, it is always debit entry. So remaining will be credited. Means when asset is increasing, we are debiting. So when liability is increasing, it will be credit. When capital is increasing, it will be credited. And when revenue will be increasing, it will also be credited. So keep in mind that only asset and expense are debit entry. Whenever they increase, we will record them as a debit entry. But liability, capital, and revenue always recorded as a credit entry. So in this section, we know what is accounting, what is bookkeeping, and what are the five head of accounts: asset, liability, capital, and expense and revenue. And whenever asset increase and expense increase, it is always debit, and liability, capital, and revenue increase, it is always credit. But how we will record in the books, I will tell you in next section. Thank you.